Hey everyone, and welcome back to the channel. If you're anything like me, you've been seeing some wild headlines lately. On one hand, there's a lot of talk about the US dollar devaluation, massive debt, and a future where your money might not go as far. And on the other hand, we've just witnessed the US stock market hitting all-time record highs. It feels like two completely different realities, right? So, what's really going on? How can the dollar be weakening while stocks are soaring? And most importantly, what does this mean for your investments, your savings, and your financial future? Today, we are diving deep into this confusing landscape. We'll break down the true state of the dollar, explore why the stock market seems to be on a different path, and I'll share actionable strategies to help you protect and grow your wealth, no matter what comes next. Stick around, because this is crucial for anyone serious about their money. Let's start with the US dollar. For decades, it's been the world's reserve currency, the bedrock of global finance. But cracks have been appearing. We've seen unprecedented levels of money printing, trillions injected into the economy over the past few years. And with that, the national debt continues to balloon, crossing milestones we once thought unimaginable. Many experts are sounding the alarm, suggesting that this massive supply of dollars, coupled with rising debt levels, is inevitably eroding its purchasing power. Think about it, more dollars chasing the same amount of goods and services ultimately leads to inflation. You've probably felt it at the grocery store, at the gas pump, and in pretty much every aspect of your daily life. Your dollar just doesn't stretch as far as it used to. Beyond domestic policies, there are also global factors at play. Geopolitical shifts, trade tensions, and the emergence of alternative currencies or trading blocs could slowly, but surely, chip away at the dollar's dominance on the world stage. It's a slow burn, not a sudden collapse, but the trend of dollar depreciation is a serious concern for long-term financial planning. Now, here's where it gets really interesting, and often confusing for investors. If the dollar is potentially losing value, why are we seeing the stock market hitting new highs? Shouldn't a weaker dollar lead to a weaker market? Well, it's not that straightforward. The stock market is largely forward-looking. It reacts to corporate earnings, investor sentiment, and global liquidity, not just the raw value of the currency. In fact, a weaker dollar can sometimes benefit large multinational US companies. Why? Because their products become cheaper for international buyers, boosting export sales and, consequently, their profits. When these profits are converted back into dollars, they appear even larger. Also, a lot of the new money created often finds its way into assets like stocks, pushing prices up. So, while your dollar might buy less milk, it could be buying a higher-priced share of Apple or Microsoft. This creates a fascinating, and sometimes perplexing, disconnect for the average person just trying to make sense of their financial future. It's not about a direct, one-to-one correlation, it's about different forces acting on different parts of the economy. And speaking of stocks soaring, let's talk about the big financial news of this week. Just recently, we've seen the US stock market, particularly benchmark indices like the S&P 500 and the Dow Jones Industrial Average, surge to unprecedented, all-time record highs. This isn't just a small bump, it's a significant milestone that has everyone talking. What's fueling this rally? Several factors are at play. Positive jobs reports have shown continued strength in the labor market, suggesting a resilient economy. There's also a renewed sense of investor optimism, perhaps driven by positive corporate earnings, solid consumer spending, and even legislative news. We've recently seen the passing of what President Trump has called a big beautiful bill, which, regardless of its specifics, appears to have boosted market confidence. So, on one hand, we are talking about dollar devaluation, and on the other, market euphoria. Is this a bubble? Is it a sign of underlying economic strength that contradicts the dollar concerns? My take is that it's a mix. The market is reacting to real positive data points and liquidity, but it also reflects a certain level of speculative confidence. It's a powerful reminder that while long-term trends like dollar value are critical, short to medium-term market movements can be driven by entirely different catalysts. Given this complex financial landscape, the dollar facing pressure, but a stock market hitting records, how can you, the everyday investor, protect and grow your wealth? Here are some actionable strategies. First, smart diversification. Don't put all your eggs in one basket. This means diversifying not just across different companies, but also different sectors and even different geographies. Consider international stocks or ETFs to reduce your reliance on just the US economy. Think about different asset classes. A balanced portfolio might include not just stocks, but also bonds, real estate, and for some, even a small allocation to inflation hedges like gold or strategic cryptocurrencies. Second, consistent investing or dollar cost averaging. Trying to time the market is a fool's errand. Instead, commit to investing a fixed amount regularly, regardless of whether the market is up or down. When prices are low, your fixed amount buys more shares. When prices are high, it buys fewer. Over the long term, this strategy smooths out your returns and significantly reduces risk. Third, ruthless debt management. High-interest debt is a wealth destroyer. In an inflationary environment, while your debt might technically be worth less in real terms, the high interest payments will still cripple your ability to save and invest. Prioritize paying off credit card debt, personal loans, and any other high-cost liabilities. Fourth, maintain a robust emergency fund. In times of economic uncertainty, cash is king for short-term needs. Make sure you have at least 3 to 6 months of living expenses saved in an easily accessible, high-yield savings account. This prevents you from being forced to sell investments at a loss if an unexpected expense pops up. And finally, focus on the long term. Panicking over daily headlines is a recipe for poor financial decisions. History shows that resilient economies and well-managed companies tend to recover and thrive over decades. Stay disciplined, stick to your plan, and ride out the short-term volatility. So there you have it, the surprising dynamic between the US dollar's challenges and the stock markets. Record-breaking performance. It's a nuanced picture, and understanding these forces is key to navigating your financial journey in 2025 and beyond. Remember, staying informed and disciplined is your best defense against market volatility and economic shifts. Your financial future is in your hands. If you found this video helpful, please give it a big thumbs up. That really helps the channel grow and reach more people. And don't forget to subscribe to the channel for more insights into navigating the financial markets, personal finance tips, and weekly economic updates. Leave a comment below and let me know, what are your biggest financial concerns right now? Are you worried about the dollar, or are you more optimistic about the stock market? I love hearing from you and engaging with our community. Hit that notification bell too, so you don't miss our next video. Thanks for watching, and I'll see you in the next one.